Hey traders, welcome to Charts and Coffee. Hope everyone had a great weekend, got away from the screens for at least a little bit. Join me for maybe our Sunday show. We've been doing a trading Q&A on Sunday. You bring your questions and I'll show you what I'm looking at on my charts and in the data. And of course, it's Charts and Coffee time. So this is our pre-market, pre-game warm-up before we get into our trading day. We'll start off with a look at the S&P. Of course, if you have any questions, get them in quicker. We end the show at 9:20. So if you do have any questions, let me know what you're looking at. Let me know if you have a position in that symbol. Let me know if you're bullish or bearish. What time frame are you looking at? The more detail, the better. So let's kick it off with the S&P here this morning. If you joined me for yesterday's Q&A, you know that I discussed a lot about the unusual and almost just a one-off event that is OPEX, options expiration. And I mean specifically the third Friday of the month. It's a unique shenanigan type event where the main objective by the end of the day is to render the most number of options worthless. And a lot of folks ask, who's they? I try not to say they very often, but think about it as if you sold an option and you are a firm and you can control some flow, meaning you can execute trades that are pending on your book, whatever it may be. If you can manage to run stops, and I had a mentor a long time ago, and I remember this phrase so well because it's so true. The market moves in the direction of the most stops. Now, you might say, well, Rog, that sounds insidious. It's stop running. No, let's not take that they're against us mentality. Remember that a large part of market behavior is the job that brokers have. They're not all speculating, right? Part of the job, part of the way that they get paid is simply to fill orders. And where are you going to go? If you saw a group of 1,000 people here and a group of 2 people over there, and you know where there's more people, there's more business, where are you going to go? You're going to go to the group of 1,000 people. It's nothing insidious. It's just a matter of part of their job is they get paid, right, to fill orders. It's an order matching system game that we play called trading. And that just is very much the focus on an OPEX Friday. Now, you can also see this happening on any expiration, but most emphatically on OPEX, again, the third Friday, because there are just so many contracts that are going to expire. All right, so we get weird action. Does that mean that we're going to see that perpetuating into the next trading day, in this case, Monday? No, and you can see we're already doing something pretty interesting. We have yet, I'm going to show you a little bit more of this year. Okay, so this is the bulk of this year. And this is that's the first trading day of the year on the far left of this chart that I'm looking at, this larger chart. And after the 15th, we got halfway through the month. Now, remember, we have the New Year's holiday. We were waiting on the inauguration because we've got that 4-year cycle in play. And not since the 15th has the S&P closed below. I mean, maybe if you want to consider, that's pretty much at, right? Not has it closed below the anchored VWAP to the 2nd of January. Why the 2nd of January? That was the first trading day of the year. So if there's an anchored VWAP that you want to put on your daily time frame, make it that, right? Make it that. All right. So as we move to, as we see here, moving to that level, I'm going to expect some support there until proven otherwise. Piercing that level is not as important because we know one thing. The old saying is true. Amateurs open the market, professionals close it. The end of something, the end of a day, the end of the week, the end of the month, the end of a quarter, the end of the year, the end of something, how the movie ends, right? It's far more important than what happens, midway through the movie, right? And that's what I keep in mind when I'm looking at something like OPEX. And we do have a number of long positions that we're taking into today. Doesn't mean that we can't go back down through this level, but I'm going to presume support holds until it doesn't. And I get a lot of questions about different levels of support and resistance on my charts. Let me grab my drawing tools here. And I'm going to highlight a few things because there's just so much technobabble in trading. And I really do my best to sort of use the language of trading and not get caught up in things that You or I may not know what each other is talking about. So take a peek. This is an anchored volume weighted and always anchored volume weighted average price. So think of a moving average. I think everyone here would know what a moving average, even a simple moving average is, right? So think of a moving average where volume is really the priority. Think of volume as size. Think of volume as, when we talk about big money, we talk about flows. Think about size. And when you're thinking about size, think about dollars, right? We know that size and dollars matter, and anchored VWAPs are just another way to identify that reality. Okay. The next thing on my chart, which might seem a little different than most, is these gray and gold areas. Okay, this is volatility. There is a certain, and we all know this anecdotally, but we typically don't have a way to quantify it in a consistent, accurate manner. So if I'm taking a look at volatility, there is a typical amount of volatility that any particular symbol is going to have on any particular day. And so my job, and this is something that I started the quest of in my third book, which was at this point, I think I was talking to the group almost 14 years ago. So over a decade ago, I said, hey, wait a minute, there is a typical price movement range. And if I can decode that, I can find the typical, this is about 68% of the time, where volatility says, hey, Rag, there's resistance and there's support. And I put that on my chart. That's another way of looking at support and resistance. And this is the chart of gold. So this isn't just talking about the S&P or gold or a stock. This is everything. Everything has a particular type of volatility-based support and resistance. But let's go back to what support and resistance is, and really the hallmark of my trading. Gang, number one, find the trends. Meta continues to be a terrific uptrend. And in the case of an uptrend, find support. That's what buy the dip is. Find a trend, buy support. That's just decoding buy the dip. Now, what again is support? And I'm going to be focusing on the long side of this environment. We just hit a brand new all-time high in the S&P. Gang, all-time highs are never bearish. Doesn't mean that we can't pull back. Usually there's going to be a catalyst, and also usually there's going to be a scheduled catalyst. Now, I know in the beginning of any 4-year cycle, there's a lot of adjustments that need to be made. Most of that was done the second 2 weeks of January. Now we're starting to see a little bit more normalization of volatility and trends. So support is what? Support is buying. If I come in and I say, I want to buy Meta at, say, 683, I'm coming in and buying, right? That's support. Buyers are support. What else are buyers? Buyers are demand. Same thing. So, let's not get caught up in all the gobbledygook of trading. If we want to just bring it down to the most basic type of languaging, it's a floor, right? There's floors and ceilings. There's support and resistance. There's buyers and buying and demand. And the flip side of that would be resistance, selling, supply, and a ceiling, right? What isn't important is the language, right? This wording, right? The words don't matter as much as what the meaning, right? So how are these levels being calculated? Well, we talked about the anchored VWAP here, and we talked about the volatility. That's what's important, right? Not that I'm giving it some cute little buzzword like floor, right? Why is that level there? What is the calculation, right? In the case of the daily price movement ranges here, and I don't want to sound fancy, but it is math. It's an algorithm. That's all an algorithm is. It's math. It's a lot of math. It's more math than I want to do manually. Hence, it's beautiful to have this stuff automated on the chart. And gang, that's kind of where we are right now. I'm not really bearish. I know there's a lot of bearish talk out there. It depends on what we're looking at. Are some indices more bullish than others? Yes. Are some indices more bearish than others, or sectors? Absolutely. Not everything is the same. And they're not all going to move the same, because the things that are in them, the stocks, the sectors, the weighting, are markedly different. So keep that in mind as we're getting through, this first quarter of 2025. Admittedly, it's been raucous. And that's okay. We're traders. We know that everything's going to move in a straight up trend. In fact, we don't even want that. When we think about words like volatility, and that's something that I've specialized in the better part of the last, like I said, 14 years. It's not volatility that we want. It's continuation. And even more than that, it's not just continuation that we want. It's the opportunity to get a fill and then expect the market to continue in a particular direction. And that's where trends tend to shine. All right. And that's where we are right now. And slowly but surely, we're getting more and more trends. And we've been talking about trends in some of the sectors for some time now. And we're every single week, if not at least twice a week, we want to revisit that list, that watch list that we have and say, look, is this still exhibiting the kind of characteristics that would favor continuation, right? And that's the game, gang. That's the game. If we know that 2020 was such a great year, why was it a great year? Because we had so many trends that continued like nobody's business, right? It was Q1 2024 that behaved very similarly. So we know that trends help us grow an account. So then shouldn't our first job be finding trends? Well, that's my number one job, right? That's what I focus on. All right. So let's go ahead and take a look at some of the symbols that we've got here. Let's see, CVNA. All right. So since you mentioned, Eddie, that you're looking at CVNA swing, for me, a swing trade is going to land on one of two time frames. I don't use multiple time frame confirmation. I don't need the 5 and the 15 and the 30 and the 1 out. I don't need them to line up like croquettes. In fact, what that guarantees you most of the time is that the trade is going to be very late to the party. So when I look at something like CVNA and it's a swing trade, one of two time frames, either the 1 hour for a short-term swing or the daily. I frankly don't love either. Here's the thing. Take a look at earnings here. And those of you that follow me know I hate earnings season. It's a spectacle. It's chaos for really no other reason than we're all looking at this, we meaning traders and investors, and whether or not the last quarter was good or bad, everyone freaks out. It's become a very short-sighted thing, adding volatility, frankly, that we don't need. However, this particular volatility event, you can see happened, let's see, when was it? And I don't follow CVNA that closely. I have a lot of stocks that I look at, but most of the time I'm going to look at trends. Trends immediately in front of earnings, leave them alone, right? What do I mean by that? Well, I don't want to love this trend and even buy a shallow dip only to have earnings basically whack-a-mole a stock by the tune of 55 points. And it's not just CVNA, right? We saw that Newmont Mining had something similar last week when earnings came out. We saw that Walmart, gorgeous trend, had something similar that happened. Leave a stock that's either immediately going into 1 to 2 days, leave it alone, and then leave it alone for another 1 to 2 days. Give it some time to get through this spectacle. And this is why, right? Imagine buying Walmart at 105 and not realizing earnings are just a handful of days away and then it opens down at 95. Those are the things that we want to avoid. And that's basic risk management. So what does that have to do with CVNA? The same process applied to whatever symbol is on my chart, which means that I need to give it a little bit of time to sort itself out, at least 1 to 2 sessions after earnings, and then I'll take a look at what's going on. That anchored VWAP might be interesting, but be careful because look at the kind of candle and the ranges, volatility, that we saw before earnings and after. Clearly, Eddie, something's still going on at a high, exceedingly high, outside the quote unquote normal, right? Going on. So let it get back to sort of normal price action. Let it kind of contract back to what we typically see. And then I would look for an inside day or a minor low. And that's the way I would look at CVNA. Definitely one to keep an eye on. It was in a trend. Earnings have definitely upended the trend. You know, reason number 907, we want to avoid this ridiculousness of earnings. I don't trade earnings. I don't make a lotto binary plays on whether it goes up or down. That's not risk management. My number one job is to realize I'm playing a risky game. And, you know, I was mentioning this in yesterday's Q&A. What do we know about, we just had the Super Bowl a couple weeks ago, right? What wins a Super Bowl? A good defense. All right. Aside from that, the team, and I remember Tom Brady talking about this before. Yes, I'm a Patriots fan, unapologetic Patriots fan. What did he talk about? And every quarterback says this. The team that gives the ball away is likely going to lose. The team that turns over the ball is going to lose. What is that? That's the opposite of a good defense. That's the opposite of risk management. So I'm going to be a little bit careful there. All right. Roberto asks, do I offer a course on support and resistance levels and timeframes? Roberto, we have the Sector Secrets Mastery where I have automated all the levels, whether it's price-based, like my Darvis 2.0, whether it's volatility-based, like I talked about with the, let's pull up another symbol that's kind of popular, Apple, right? Whether it's volatility-based, whether it's price-based, whether it's volume-based, I've automated all those levels. So yes, it makes sense to know why the level is there. So whenever I'm talking about support or resistance, feel free to ask me, Rog, what kind of support and resistance? Because again, black box, and here's my magical secret squiggle. The reason I call this indicator down here secret squiggle is kind of making fun of the indicator industry that says this is this black box magic thing. None of it's magic, gang. Either it's based on price, it's based on volatility, it's based on volume. That's really all we can work with. Sometimes it might be based on time, right? You might say a seasonal support or resistance is based on time, but there is a calculation underneath it. And the first thing is to figure out, okay, is it a volume-based level? Is it a volatility-based level? Is it a price-based level? What is it? And that's where support and resistance needs that next level of, okay, but why is it there? Why should I care? And in terms of the course of it, I also view the advantage we have as modern day traders. Say, look, there are some sophisticated calculations out there of volume, open, high, low, close, of volatility, and why not let these very smart platforms take the ideas we have in our head and crunch the numbers for us, so we're not emotional about it, so we're not making mistakes, right? When I used to do all this stuff manually, of course, it's subject to my emotion, my bias, my mistakes. So what I do is I say, hey, look, computer, you don't care what position I'm in. You're just looking for that characteristic, that qualification to be met. And then there's the reading on the chart. And so that's where we can take a lot of the learning curve away of how to draw it and really get into why is it there. So I do that on a regular basis. And I will remind everybody, just in case you didn't know, or maybe you're joining me for the first time, I don't know if, again, just to be safe, I don't want to be wrong on this and have anyone upset at me, but just to be safe, I think it's going to be Wednesday. We have the immersion that you can still sign up for. And you can check that out at mysimplertrading.com/immersion. We've created a package where you can either join me for what's going to be 3 months of 1 hour sessions. So every single session, we're going to cover a particular topic, right? And you can see here we've broken down. It's a huge list of topics, the kind of things you need to be a trader, the kind of things that I do every day. This week, and we're going to go through these topics, not necessarily in this order, but all of these will be covered. And the one that I'm going to be covering this week is, let's see, that's the last day. Oh, hang on. I'm hearing for the boss here. Tuesday's the last day, Trish boss, or Wednesday. Anyways, be on the cautious side so you can get all your indicators set up and watch the tech session and do it on Tuesday. But our cutoff is Wednesday. And we're going to be getting into basically the Holy Grail. How many traders out there say, Rog, I think I'm pretty good. Wednesday. All right, Wednesday. That's it. That's the hard cutoff. So how many traders out there say, hey, Rog, I don't know how many contracts to trade, right? I don't know how to control my risk. That's going to be the session this Wednesday. You do not want to miss it. This is what I call the Holy Grail. Nothing, not a single indicator on my chart is more important than understanding how to manage risk, gang. This is why traders aren't growing their accounts. It's not because they're lacking one of my secret squiggles. Yes, I can make fun of my own indicators, even though they're amazing. But that's not why most traders are struggling. They're struggling because they're not placing trades in the kind of size that their account can manage risk at. And there is a formula for that. It doesn't matter if you have a $10,000 account or a $110,000 account, or frankly, $1 million account. That formula is the same. So yeah, you can check that out, Roberto, at my.simplertrading.com. All right. As far as a couple quick symbols, I know I'm running over, but let me grab a couple more. Do I like XLC? Jas, I do. I need an inside day, but gorgeous green candle in the gray zone. Remember, XLC is also meta. And this is where we dive deeper into an ETF and say, hey, is there maybe a better individual stock in that group for a buy. Also an XLC, just remember that one can be kind of a liquid at different strikes. So make sure you have the liquidity. PLTR is very close to a mean reversion, and that anchored VWAP that I talked about earlier. Be patient, gang. I'm going to tell you this right now. Optimize for patience. When everyone else is running around like a chicken with their head cut off, I know it's a terrible analogy, but y'all get the point. Poor chicken. When we are looking at something that is very volatile and very chaotic and big moves, let everyone else go into the mosh pit because they're going to get the black eyes and broken ribs. Let's just wait for the dust to settle and then we'll come in. More so than being first, which we've celebrated way too much in sort of trading history and trading lore, it's okay to be last. It's okay to wait for everyone else to do whatever they got to do and then see what is happening. And that's really a lot of what I would say Twilio, leave it alone. Yeah, I would leave it alone. Look what's happened since earnings. Again, many of the reasons I detest earnings is this kind of nonsense. So is something that markedly wrong with Twilio? I don't know, but I'll wait again for the mosh pit to finish up. All right, gang. As always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow, same time, same station. All right. And I do have a list of things to keep an eye on here on the left side. G20 starts Wednesday. No major scheduled data today. Big events Thursday and Friday this week. And Friday, it's the last trading day of the month. All right, gang. I'll see you tomorrow.